Hello and welcome to the Wise Money Guys radio show. I'm your co-host, John Scambray, and I am here with my partner this weekend,
Giuseppe Visconti.
And we are certified portfolio managers, which means we're investment experts, and we're still spring chickens. That's what's great. But honestly, experience, especially in times like right now, matter, because we've been hopefully educating the public, talking as much as we can, putting out, advice and ideas. Well, not advice, but suggestions and ideas that exactly what is happening right now would be happening. We started saying that this would be a volatile year, albeit we thought it would be a good year. So that's a great way to put it. I talked a lot about headwinds and tailwinds and speed bumps. And I said repeatedly, look for these things to affect the profitability in your positions and, rebalance.
A lot of volatility in the Mag 7 and some of the AI.
It's really the software
and cryptocurrency
of tech that has just been getting hammered so far this month.
Right.
Bitcoin is absolutely getting hammered because we've said, and if you aren't aware, it really is a risk asset. It is not a reserve currency. It is not a stable investment. It is a risk asset that we follow. Is you don't have to pick a bottom. We made some changes to our stock portfolios this week, and some we were selling. They weren't the two changes we made weren't selling at the very top of what they had achieved.
Yeah, you want the meat of it, but more so you need to figure out it's risk management really is, but you have to have a target for yourself. When are you willing to take some profits off the table or sell it, right? What's your target? You bought something for $100 and then it goes to $200. Is that enough? Does that meet your goals, right? You don't want, a lot of times people will get, in a situation or a scenario where you're catching a falling knife and it goes down and down. And you're like, I'm just going to hold on to it. And you need to have kind of your target on the top end. You have to have your risk line on the bottom end to know when, hey, this is enough. This is going below or beyond my risk tolerance and threshold. What's happening and what we're seeing is there's a broadening of the market, and we're seeing a broadening, which is great. So, the Mag 7 of the S&P 500, it's the other 493. So what we've been seeing is, sectors, specifically sectors like you're talking about, communication services, staples, energy, industrials, materials.
Okay.
So those are all.
To cut you off. Go ahead. What'd you say in there? What sector?
Communication services.
No, not that one.
Staples.
No, you're avoiding.
Industrials. Materials.
Nope.
Energy.
I've loved the energy sector and have talked about it for years on this radio show because, again, the world has to have it. There isn't anything we do that you can't do it without energy, obviously, in its different forms. Whether it's your utilities at your house or your business, or whether it's now powering data centers.
So are all these different
flat out going to take nuclear to power these data centers? I mean, there's
you can't do
not enough refining of oil. There's not enough infrastructure in place to really keep up with the demand for the power that these data centers will take.
But that's exactly what we do, is look at your overall portfolio, do an analysis, see what you're in, but then more so, put a plan together if you don't have a plan, and then make sure that those two things match up.
And the reality is right here, the mistakes that people make, this is super important, is they try to time the market. You don't have to, sell at the perfect top. You don't have to buy at the perfect bottom to make a lot of money in investments over, any sort of normal period of time. And so we were texting each other early this morning, shortly after the market opened, that, hey, good thing our clients have fixed income, alternatives, cash, real estate exposure, metal exposure, so on and so forth, and not just stocks. You don't need just stocks in your portfolio to make great returns on your money. I would say that's a lot smarter than thinking that you're safer because you're putting your money in Bitcoin. right?
No, but the reality is when you're looking at a long-term perspective, I think I ran it for like 20 years, at a time. We don't just put together this portfolio and everybody gets the same portfolio because everybody's different.
But that's a crucial point, Giuseppe, because what we do is custom for our clients.
Right.
We don't just put you in a cookie cutter, basket of mutual funds is going on. And that's what I really like about our value proposition is because we take a planning approach, because then that planning approach leads to a custom portfolio where we do focus on diversification amongst the different asset classes to get you to whatever your minimum returns to objective are in the least risky way that we can get you there. And the reality is it will never replace humans.
Right.
Because
it doesn't have emotion.
It doesn't have emotion. It doesn't have a conscience. That doesn't have a soul. But the reality is artificial intelligence, robots, computers will never replace humanities. It will increase productivity. It'll make us more efficient, but it will never replace us. But again, the good news is that how we do things and what humans do for people, at least for the next couple of decades, are here to stay. You've been listening to John Scambray and Giuseppe Viscani. Come back and listen to us next weekend. Bye.
Have a great weekend.